Hello, everyone. Thank you so much for joining us today. I'm Mor Assia, founding partner of iAngels. Together with me, we have Yoni Assia, founder and CEO of eToro. And this is really the largest social investment network in the world. Today, we are here to discuss the future of investing, the future of finance. Yoni, thank you for joining us.
I'm always here. It's our house.
I think the question I really want to ask first to kick us off was, how's your day, Yoni?
Good. I just landed from Abu Dhabi.
Fantastic. We have a few topics to cover. We have a very long agenda. I want us to really start with the story of eToro. So how, eToro, from a young company to being the leading fintech in Israel. Tell us a little bit about what's going on in eToro, what's on your mind, and how you are really navigating this new future of finance and investing.
Hi, everyone. So I know some people here on the webinar, but I'll start from scratch. So we started eToro in 2007 with a vision of opening the global markets for everyone to trade and invest in a simple and transparent way. Today, eToro is the world's largest social investment network, where we have 34 million registered users, over 3 million brokerage accounts, where our customers can trade stocks from 20 different capital markets alongside currencies, commodities, indices, ETFs, and cryptocurrencies. And the unique part of eToro is its social network. So you can actually see the performance of everybody on the network, see their actual portfolio location, in their track record, and then you can use our unique technology called Copy Trader to automatically copy the most successful investors in the platform, which we call popular investors. We have over 3,000 popular investors on the platform that basically get paid simply because other people copy them. So when you copy someone, it copies their entire portfolio into your portfolio and trades in your account the same proportion, the same time, and the same price. We've expanded quite a bit over the last couple of years. Today, we have about $9 billion of assets under administration across both stocks, crypto for 3 million funded accounts, and we're regulated in Europe, UK, Australia, US. Just this week launched also eToro in Abu Dhabi and are setting up our offices in Singapore as well.
So I think what's on everyone's mind is really, I want to say, the turbulent years that we've been seeing in capital markets. I think this 2 years where we saw the correction happening in the markets has kind of somewhat reshaped how everyone is looking at investing or how everyone is looking at engaging in capital markets. I think because you started the company, so young, you really have that perspective of going through cycles in that respect. And I want us to take a moment to kind of understand what brought us to where we are today. How are we looking at the future? If we're looking at recovery, what should we expect? And how should people really engage in capital markets today?
So I think the last couple of years, maybe I'll start from sort of 2020, where we started a bull market or significant, or already 10 years of bull markets in the stock markets. Then we had 2021, which was really the rise of retail investors all around the world. We've seen 100% revenue growth from 19 to 20, then from 20 to 21. And that was sort of years of significant expansion in the interest of consumers and retail investors all around the world, both in the stock markets, so a stock bull run, as well as a crypto market bull run. Then we entered into 2022, where generally 2022 was a bad year for both the stock markets as well as crypto markets, alongside, obviously, and maybe a part of the increase in interest rates. So the rise in inflation and the rise of interest rates. And we've seen the shift sort of starting from 2022. Usually retail are a lot of times sort of lagging behind the markets. So they come into the markets after the markets sort of are rising. I think that's what we're starting to see now. So people are actually realizing we're very close to the S&P and NASDAQ all-time high, and we're seeing sort of people realizing, are we again in a bull market? So 2022, we saw gradually less and less people being active and engaged. And then now in 2023, we gradually see along the year, people realizing actually crypto has risen quite significantly this year. People are actually very interested.
The year, mostly.
Actually, it started in Q1, so we saw this entire year was a surprise. I think it was a surprise for a lot of our investors. Investors came into this year with high level of uncertainty, knowing that interest rates are high and actually going higher, with fears that inflation potentially is not going down. So we saw two sort of big themes. One is the interest of our investors in yield products, in interest rates, in ETFs, in dividend yielding companies, which was quite interesting. So we saw sort of a trend towards sort of value investing on the platform. And as the year progressed, I would even say sort of end of Q3 and Q4, we're starting to see people sort of realizing that actually crypto has been high for the entire year and rising, that the bull market is coming back, and we see heightened level of now activity, both in stock trading as well as in commodities trading and crypto.
So let's talk, if we're speaking about the realm of public markets and what we're seeing. Also, let's kind of take a carve out to technology, because I think that's really relevant also for iAngels. Obviously, as we look at the public markets as used to be kind of like the holy grail for tech companies in order to provide shareholder performance and liquidity. So I think these years we're seeing an understanding that the multiples that we've been seeing earlier, in like 3-4 years ago, are probably not going to be the same multiples we can expect from technology companies. Does that make them still attractive? Does that make them still able to IPO successfully? I know several companies that were kind of on the verge of considering, the IPO route, and then understanding that, having enjoyed significant growth and growing enterprise value over the years, maybe they're not going to be able to sustain that same performance as a publicly traded company. So what do you think we're going to see, or what are you seeing in terms of tech companies, their performance, and will or will not going public still remain, the holy grail in order to achieve, the best performance for shareholders?
So first, obviously, we've seen sort of a significant shift. 2021 was obviously a bit of irrational exuberance. So prices were disconnected from from numbers. Valuations went too high, both in public markets and in private markets. And I think since then, public markets have sort of corrected quite fast. So if we think of sort of either fintech or growth technology, sort of corrected quite fast towards, I'd say, valuations based on financial analysis, DCF, all the old stuff people love to forget.
Traditional.
And I think there is somewhat of a lag in private markets, as always. So private markets have, I think, started to correct and created somewhat of, because of the liquidity difference, obviously created somewhat of a gap. And if you look at 2023, what's interesting is what everybody calls the Magnificent Seven. So there was actually a flight to safety. The flight to safety was, people expected flight to safety to actually go to either dividend stocks, to yield, but actually the flight to safety was towards the large tech companies, the Magnificent Seven, the Apple, Microsoft, obviously with the AI sort of starting the trend. We're just actually celebrating today 1 year for ChatGPT, which had also interesting turbulent times. But I think people were surprised to see how resilient the large tech sector is. The small tech sector really just sort of is still recovering and recovering over the last couple of months, where people understand, okay, it does seem like the markets, NASDAQ, S&P, are sort of actually sort of stabilizing at this point. People are now seeing inflation going down, which will suggest also interest rates eventually going down. People don't want to miss a bull run. And I think what we're seeing now is a bit of a transition from just the Magnificent Seven, which I think contributed to the majority of the rise of both S&P and NASDAQ. And now people are finding those opportunities in tech companies, and then tech companies are starting to sort of recover for the entire of 2023 from sort of the significant change in valuations and multiples in 2022. And I think that's the real thing, both in public markets and I think the opportunity in private markets as well, is now valuations actually make a lot of sense. So you see a lot of interesting opportunities in public markets, and now gradually, I think we're seeing the same. I think we're seeing private markets also correcting to valuations, which eventually will lead to the IPO markets to be able, so when the bridge closes down, that enables companies to basically go public. We closed a round of financing of $250 million. It's a $3.5 billion valuation. And when we're talking to the environment, it does sound like banks are talking about basically the IPO markets opening up gradually now towards probably H2 next year to see again an IPO cycle.
Interesting. Okay, so we touched on AI and ChatGPT. We'll get to it in just a second. So we'll kind of open a window and hold that thought. I wanted to ask, because just the last question about tech companies and the stock markets. Previously, every company that wanted to go public will try to think about how to be technology enabled, how to create a tech infrastructure so that they can enjoy also being able to, the offering as a tech company and enjoy that journey, because it's always seemed to be, the best way to go and the best way to get more eyes on your stock. Do you think this is still going to be, the case? I think now, for us, we see it all everywhere. Everything is tech enabled. You're looking at companies that are dealing with real estate, with consumer products. Everyone are looking to onboard technology, acquire tech companies, create, that narrative of we are a tech company, we have tech infrastructure to be able to enjoy that. So you think this is kind of like early, but this is still going to be, the way to create the value?
I think technology, maybe from the prism even of fintech, is basically just a name for modern innovation, right? So you can't scale a business without the use of technology. You can't create a product market fit without constantly innovating towards your customers, whether it's B2C like eToro or whether it's B2B. So I think technology, we're in a revolution, that started with a dot-com bubble. So it's here, definitely here to stay. We're seeing a big part of the S&P still continues the shift towards being more technology oriented. And I think people see the opportunities when you look at companies, whether it's Microsoft or Tesla or Apple, the scale and size that you can reach through technology. And I think that will definitely continue. But with that, I'd say still somewhat in public markets, back to fundamentals. So people aren't buying just stories. People want to see real KPIs. People want to see how the unit economics of companies actually work, that the unit economics are profitable, and that companies are actually generating sustainable, consistent growth, not only of top line, but also of the bottom line. And I think that'll stay here for a while.
Do you think there's still going to be, obviously Wall Street is penalizing companies, even tech companies that are not profitable, or they don't have, enough, as you said, profitable unit economics. Do you think there's going to be some patience with that, or still companies are going to be heavily penalized if they can showcase a path to profitability, or if they can showcase that they can reach that in a time horizon that makes sense? Or are we going to see still, very harsh analysis on companies that are not being able to reach that milestone?
I think public markets shifted back to fundamentals, and it's going to take a while before sort of the next irrational exuberance, right? So from dot-com bubble towards 2021. And that very much relates to interest rates, right? My view is we're going to see the basics are actually deflationary, because technology is actually deflationary versus inflationary, but that will take some time, maybe 2025 and beyond, but we'll see interest rates gradually going down back to maybe not the zero levels that we've seen, but under 2%. And as long as interest rates are high, then I think profitability matters a lot, because the cost of money matters a lot. And therefore, people are really trying to focus on companies that can generate profitability and profitability growth. And I think the first part of the cycle over the next 12 months is still going to be focused there.
Okay, excellent. I want to switch and talk a little bit about AI. I think we are definitely in the AI revolution. I think, you know, from our perspective, when we meet companies, when we meet young companies today, maybe a couple of years, you know, we would even try to roll our eyes. You know, every company would find a way to, you know, weave that into the deck or the investor deck, and it would feel almost like a joke. You know, people just want to say all these buzzwords so that they can get more eyeballs on their deck. But I think these days we understand more than ever before that it really offers a fantastic way to scale the business and also to create efficiencies within the business by essentially answering more customers, getting more tickets done, getting a better customer experience. Let's talk a little bit about that as a trend for what we're seeing in the world. And also, I think it's very interesting, the eToro story and how you're implementing AI in your own program.
Sure. So first of all, I think we all sort of woke up to a big aha moment just a year ago with the launch of ChatGPT. And I think what that did is sort of enabled everyone to realize how strong and powerful AI became over the last couple of years. I have to say, we at eToro have a machine learning and AI team for at least, I think, 5 years. But even for me, despite the fact that I have a team working on an AI, on machine learning, starting to play with a generic part, sort of a very generalist ChatGPT, was for me mind-blowing, because you suddenly realize how smart AI can be, even when it's general, not sort of specifically looking at what we're looking for, which is alpha, looking at all of the trades of our customers and trying to find out how can we look at that data and with machine learning find trading opportunities, but suddenly asking ChatGPT to write you a birthday wish, or asking ChatGPT to code, or looking at what's called baby AGI, which is tell ChatGPT to create a plan and then execute the plan. So I think everybody realized the power of it, which was both the LLM, so the technology, but also on the back end, one of the big drivers to enabling ChatGPT to the masses, and now also Grok from X and from Microsoft as well, was the back end of it, right? So the computational power that powers this, and that's the stock of NVIDIA, which is the stock of the year, is really what's powering and enabling this. Is it's AI on the cloud, right? What used to take us at eToro 6 months of computational back and forth suddenly can happen in a day, because you get that infrastructure of AI on the cloud with the back end of, you know, these monstrous machines from NVIDIA, etc. So I think that's sort of what happened, and it pushed the entire industry a leap forward of both more people understanding the opportunity. So every single person in eToro now is using some AI tools, right? So everybody suddenly realized AI can do our marketing, AI can do our content, AI can build better suggestions for our customers to suggest them what would be interesting for them to invest based on all of our customers' data, based on that customer's data. So I think everybody suddenly understands the opportunity. And the way we split it is sort of the operational part in eToro, which is the marketing part. How can we optimize? How can we create creatives now much faster, that are much more up to date, that are localized? We are still spending millions of dollars a year in localization because eToro operates in 100 different countries in 20 different languages. Suddenly, AI localization and translation became better than human one, right? And that just happened over the past year, and gradually we shifted more and more of our marketing to AI, to Salesforce, and all of our Salesforce are 500 people who are talking to clients, who are answering tickets. So now we have chatbot, we have our eToro Academy that is actually, we just gave ChatGPT to read all of the training of a new customer service employee, and now it answers in multiple languages as good as a customer service through basically embedding it in the platform. So that's tickets, that's automation. We had a couple of hackathons of making sure that all of the programmers and IT personnel in eToro are using AI tools. So things like QA, production and DevOps became super efficient because you can take code and tell AI, please write me unit testing for that code. So we spend time to make sure that personnel of eToro, all Etorians, are basically first playing with the tools of AI, and secondly, are training themselves on how AI could be a part of coding, QA, operations, marketing, every single department in eToro. On top of that, I think where AI still has a lot of opportunities for a lot of companies, including eToro, is sort of the basic question: have we found a way to use AI to actually help our customers make better investment decisions? Did we embed AI in the user experience of our customers so they become better investors, they educate themselves about the markets, they can find opportunities through these tools? And I think every sort of innovative company is trying to figure out how can I take these tools and bring them to the hands of our customers in our core business, where our core business is helping our customers make money in the markets. And I just came back, we had 200 popular investors, which are the people being copied on the platform, so the most successful investors.
That's just in Conference Now.
Yeah, in the Conference Now, we had 200 people in Abu Dhabi from 48 different countries. And I asked all of them, how many of you used AI in ChatGPT over the past year? And 100% said we did. Then I asked another question, how many of you have actually used AI tools to make better investment decisions, to make yourself a better investor? And then it was maybe 25% of the crowd, right? So I think we were very excited about how general AI is, and now companies like eToro and like many others are figuring out, okay, how do we take this power, both of cloud computing and the LLMs, and how do we embed it to make our products better for our customers?
I think another interesting element is how, like, as you mentioned, there's so much more that you can do in order to be more responsive, helpful and timely with customer requests, but even more so, you can create a way to be proactive and essentially do reach outs and create engagement and start a dialogue with people that probably, like, they don't have anything wrong going on, don't have a question. But now that they're engaged, now that you're able to, now do this in the million, do it at scale, it's much more interesting to see how that's going to happen.
We've always had, so we sort of limited in times of spike of activity, we've limited the amount of our customers who can actually access, for example, chat. This year, we've scaled significantly chatbot and started using AI. And what we've noticed is we actually increased engagement. We didn't decrease the amount of tickets, but we increased significantly the amount of people who can actually ask us questions because AI is giving them the answers, right? So it's about increasing the engagement with customers through these tools and not only making the business more efficient, but potentially more scalable.
Let me take you just for a second to a more kind of philosophical question about AI, just because I think it's very timely. Everything that we've seen with OpenAI in the last couple of weeks, the vision, how AI is changing the world, how do we have the responsibility to make sure that we're using this significant power to do good, or how are you looking at this? These are things, by the way, that Yoni and I have been talking about, I want to say, for 20 years, reading books from the 90s about the future of AI. It almost feels like this is our reality today. And in 10 years, that's going to be even more speeding up, or going to be our daily lives. So let's take just open a bracket about the philosophical question.
So I have to say that although I was familiar with AI, and I just recently also heard the story of when Elon Musk and Sam Altman started OpenAI, and it was around the importance of safety guidelines to make sure that AI doesn't that we don't build Skynet from the Terminator. And I'd say until sort of the last 12 months, I thought that was very imaginative, right? So I read Asimov and stuff, but I didn't think we're getting there. But when we look at how fast the last 12-month progress was, and I think the aha moment for me was that you can write ChatGPT a concept and then you can expand it. So there's these loops, so it's called baby AGI. When you tell me I have an idea and then you tell him to expand the idea, now actually build it, code it, develop it, run it, and it's able to do basically the entire life cycle of creation. So I think that for me was, okay, if it can create, then potentially it can also fix itself. And if it can fix and improve itself and create, then we are nearing what's called AGI, right? Artificial general intelligence or super intelligence. And I think there the big question is who has the button on, who has the finger, the off button, who has the off button? So right now, Microsoft has an off button and X has an off button. And so these large companies, right, because it's cloud-based, maybe NVIDIA has an off switch, but they're not supposed to use, but there's still an off switch right now. But the question is what happens, in my view, by the way, which now I relate to blockchain technology, right? Bitcoin doesn't have an off switch. Nobody can stop Bitcoin, right? That's the unique part of blockchain technology, but even more specifically, the incentives, everything around Bitcoin is, this is 24/7, censorship resilient, but also off switch resilient technology, right? So there's no single country, you can't stop Bitcoin. Now the question is, what happens when you have decentralized LLMs that can fix themselves? What happens when you connect technologies that are unstoppable and nobody has an off switch with technologies that are as smart as us and can fix themselves and get sort of just the guidelines and learn? And I think that leads me to think we're getting there. Usually, you know, I still think it's at least 5 to 10 years away, but it is getting there, and it is as scary as it is exciting.
With that high note, because you mentioned it, and I want to segue into what we're seeing in blockchain, because I think it's interesting for us. We're very excited about it. We're very open-eyed about the opportunity, about the, as you mentioned, the growth in the market, entering after kind of a long bear cycle. I think probably one of the longest ones that we've seen, into some optimism. We're wrapping up 2023 shortly, looking forward into 2024 and all that presents in terms of blockchain, in terms of opportunities, in terms of trading, in terms of highs, also the kind of the classic ones, but also new technologies that are coming, new capabilities. Let's talk about that for a little bit.
So first of all, we've seen a couple of cycles. So my pin tweet is 2011, tweeting that Bitcoin is rising from 20 cents to $1.50, and that the banks should beware and look at that. So, and we've launched Bitcoin on eToro in 2013. So 10 years ago, actually, when we launched it, it was $1,200. And then it went down to $150 after Mt. Gox collapse, right? So this would be the third cycle where I'm actually also seeing our customers interact with Bitcoin, with crypto. So we had 2013 rally, then collapse. We had 2017 rally, then collapse. Then we had 2021 rally, then collapse. Actually, the bull markets were longer and longer throughout that period. So the longest sort of bull market we've seen for Bitcoin was 2021. And I think that we're still sort of recovering from the damage. Every time, by the way, in all three cycles we've seen, what you've seen is a lot of technology that actually creates inherent leverage in the system. Whether the last one was sort of people leveraging crypto through crypto lending, right? So it expanded basically. So you have the M1 of crypto, which is the actual Bitcoins, and then you suddenly have companies that are printing crypto, whether it's ICOs in 2017 or crypto lending in 2021. And usually when a market goes up because it's levering itself too much, at some point it bursts. So that's what we've seen in 2022. A lot of crypto fallout, a lot of companies falling out. We've seen crypto revenues grow from, I think, $70 million revenues in 2020 to $700 million revenues in 2021 for eToro, then going back to about $100 million revenues in 2022. So 2021 was 700, going back to about 100. And I think, and for us, that meant crypto went from 60% of revenues in 2021 back to 15% of revenues in 2022, which is where it was also in 2020, right? So every cycle like that, we see a lot of retail investors coming in. A lot of people are excited. Usually retail investors, by the way, are coming in when it's really nearing all-time highs. So while crypto is actually the best performing asset class, if you look at crypto versus S&P, NASDAQ, commodities, etc., different markets, Bitcoin has been sort of the best performing asset class of the year in a much healthier environment, right? So no leverage, a lot of sort of bad players sort of got cleaned from the market. So it's really adoption. I think everybody's also expecting real institutional adoption to come with potentially the Bitcoin ETF. So a lot of people are talking about the Bitcoin ETF. Bitcoin ETF means all of the institutional investors will be able to sort of come in a non-leveraged, organized, institutional way into Bitcoin without the need to build other infrastructure. So I think that's sort of the excitement of Bitcoin. I've always been bullish on Bitcoin. I continue to be bullish on Bitcoin because I think the world needs censorship-resistant 24/7 internet commodity, right? So I consider digital gold. I think blockchain has surprised. So we've seen, I think blockchain technology, smart contracts, what Ethereum did, and sort of opened the world to the concept of smart contracts, of 24/7 finance that actually is all automated in these smart contracts that are in the cloud, that people basically code finance instead of accountants and lawyers.
Say for a second what smart contracts for people who don't understand it.
So smart contracts is code. So you think of code between two parties, or actually multiple parties, where you agree if the price of X goes to Y, or if this happens, then money transfers between different people, right? So usually, let's take eToro, for example. We work with Goldman, we work with JP, we work with UBS in our backend, and people trade. But actually creating a contract with the four of them together is almost impossible, because we can't get enough lawyers into our room to try and organize like a complex financial instrument or an agreement between four financial institutions is very, very hard. And it's the same for people. It's very hard to create today sort of guarantees and financial contracts between various participants. So you always have to sort of wait for something to happen and then settle it and sign a contract on paper for it to happen. And I think that everybody understands that potentially this is mind-blowing technology and innovation, especially people who come from code. People say code is law in crypto, but I think what we found out is that regulators don't agree with that. So the regulators don't think code is law. They think law is law and it should govern code. But the way I sort of look at it, because I think we saw a lot of people super interested in blockchain technology, how can blockchain technology transform the entire financial services industry, but it's not only the financial services industry, potentially all of industries, finance, around sort of financing, around crowd sourcing, etc. And I think what happened there is it's taking much longer than everybody expected because of regulation and because you need actually the incumbents to come in and change their infrastructure for that to really happen. You need eventually the stock markets like NASDAQ and IC to convert into blockchain assets. You need governments to convert bonds into this. You need private, a lot of people are excited about the concept of tokenizing alternative investments, maybe in real estate, maybe in startups. So making everything more liquid. And I think that took much longer than everybody expected, because the way I sort of compare it to the internet is, on the internet, we saw media basically completely being disrupted eventually by Google, by social networks, by Facebook, etc. But people also thought that immediately everybody would move to Skype. They'll stop using AT&T, they'll stop using phone, because everything will immediately move into VoIP. But actually VoIP only happened when Apple closed with AT&T an agreement and smartphones came in. So we all use VoIP. All of the voice is now over IP, but it didn't happen through Skype, which is like Ethereum. It happened through a JP Morgan launching a dollar coin, tokenizing their assets. So I think we're still waiting for the large incumbents to embed blockchain technology for us to really see the benefits that will transform the entire financial services industry.
So what are you excited about towards 2024?
I think I'm very excited about AI. So I said, like, the AI for us is as exciting as when we had this aha moment with Bitcoin in 2011, and it took 2 years to launch Bitcoin in 2013, and it took another 4 years to see the crypto rally of 2017, and for that to be transformational for eToro's business. I think I'm as excited about AI today as I was about Bitcoin, crypto, and blockchain 10 years ago and 5 years ago.
Now it's all together.
I think
now you can put it all together.
I think that opportunity of how businesses transform themselves into AI-driven, and specifically our core business of how can we help our customers become better investors? How can we help our customers find alpha in the markets and find the right investments for them? I think that opportunity for eToro is amazing, but it also is amazing the same way I'm looking in my business for almost any business out there, right? So if you think of Wix, which is a company I love, publicly traded, potentially now you can actually write just the concept of what you want to build. It'll build everything for you, right? So it's transformational for every industry we can think of, but it's up to eventually the founders, managements to embed that into their business and to see that scale. And I'm excited about seeing, hopefully, inflation keeps on going down, interest rates keep on going down, and hopefully we're coming back into a bull market and people sort of lose the fear of everybody had that fear of recession. Can we get into sort of back into lower interest rates without recession? I think gradually people are gaining more and more confidence in the markets.
Okay, so now let's take a huge zoom in back to Israel. For us, for iAngels, this has been very, very exciting couple of years because of some of the trends that we've been discussing now. The correction in the market, seeing more sane valuation, seeing more consistent and healthy growth. As an investor, it's very exciting. It's a very exciting time to be investing. We're really looking forward towards this vintage to be, one that books will be written about and core technologies are going to, come out of it. I think it's very interesting also to understand, for us, we're looking at early stage. We're looking at very young companies that are sprouting. Some of them were kind of waiting on the sidelines because they saw the correction in the market and say, oh my God, maybe it's not a good time to fundraise. Now that everybody understands that it's not a correction, it's not a blip, but it's kind of like the new era of investing, they are coming out. So we're seeing a lot of interesting deal flow across different sectors. Most of the most exciting ones, I want to say, very software growth mindset oriented. So people want to build companies where they can really grow fast, scale fast through code primarily. I want to hear from you how you're looking at the Israeli ecosystem. It's not detached from what we're experiencing as a nation today. That's very difficult. But I think that our job, our role in the fight is really making sure that Israeli high-tech resilience continues and there is a strong day after, and that we can build very strong, successful companies and also show the world how we operate, because companies in Israel always innovate for other markets. And so we always have to keep staying on that KPI track. What are you seeing as a large company, as a mature company? You have over 1,000 employees. You have customers, as you mentioned, from all over the world and partnerships. How you're seeing Israel as an ecosystem and how you're looking forward to that.
So I think what we've seen going back to very similar to public markets, private markets.
How we divide and conquer the household.
That's how we divide here: public markets, private markets, and we fight in crypto. So I think what we've seen in 2021 again, valuations got a bit detached, right? And I love this quote, although we're not doing it sufficiently, but which is be fearful when everybody's greedy, and be greedy when everyone's fearful, right? That's a Warren Buffett quote. Basically, when markets are very, very, very high, go back to cash, be conservative. When markets are low, that's where you actually invest there. That's where you make money when everybody's fearful. I think with interest rates going up, that definitely created a significant correction in the private markets. So if it was disallocated towards too easy to raise money, and therefore, by the way, also inflated the cost of salaries in Israel. So it was very hard to recruit in Israel. Everybody were expecting there was a significant inflation in the costs of creating technology. I think this year we're seeing a significant contraction. So it's much harder to raise money, which is actually a good thing for people who want to invest in the markets. And historically, there's been a sort of a gap or a spread between the valuation, again, very similar to public markets, where the valuation gap now is even bigger between maybe an Nvidia and a Wix, right? People waited to see that Wix is generating actually net income and profitability in addition to cash flow, right? So, and that was an opportunity and still potentially is in many others in the public markets. And I think what's happening right now is startups in Israel are actually raising funds at much more attractive valuations for investors. And they're able, both because of the dollar, the actual labor market in Israel, which now has significantly come down. You can find great talent at more efficient costs in Israel. So there's not that cycle of a bubble market. And the use of AI. So suddenly a small team, a 10, 20 people team raising seed money can do 10x more than they could in the past at potentially fraction of the cost and at a lower valuation, right? So I think that together creates a great opportunity for investors in the Israeli ecosystem. Second, and related to obviously the fact that Israel is at war, although right now we're at ceasefire, which is good, I was amazed by the resilience of, I don't know if it's us as Israelis or us as a company, eToro, but after the initial shock of everything that transpired and the terror attack, I think we saw sort of now back to a new normal. Still obviously geopolitically negative, but companies and people here are super resilient, and the tech industry sort of also work together to say no matter what Israel delivers, because we understood it's important both to our employees, right, and a lot of our peers to say, hey, that's actually our contribution. We continue to operate. Our service has not been interrupted for a single second with everything happening in Israel. And gradually sort of, people got back to their lives, their work in an efficient way as always. And it reminded me a bit again with all of the disclaimers of obviously this is very, very different, but there was this shock when COVID hit and a lot of uncertainty, but it was a global shock. So everybody around the world sort of realized this shock, sort of what happened, but then 2-3 months after, people sort of, realize, we can work from home, things sort of continue as usual. Some industries actually sort of gained a lot from COVID, like the tourist industry and retail investing. And I think, us as Israel will get stronger out of it.
I want to say that you were saying, how we kind of went back to work and we're efficient and everything. I want to say what amazes me and inspires me in so many ways that the high-tech ecosystem, it's not only that these companies were taking care of their own business, but they were very significant contributors to kind of like to civilians, to people, to families that were hurt, to municipalities that were hurt, to anywhere from providing computers to children over this period of time. People had to leave home or donate funds or rally up together, but create a lot of kind of like another layer on top of you have to deliver, you have to do all your work. But the high-tech ecosystem was able to be incredibly productive and a real contributor to the nation, like with everything that's been going on. So I think that's really inspiring to me, and obviously looking to continue to do great work with the ecosystem and invest in great companies. Because we don't have a lot of time, I want to open up to Q&A. It's not every day that we have an open Q&A session with the Yoni Assia, and we already have some questions in the chat. If people want in the Q&A, please write in the Q&A. If people want to ask questions, now is a great time. I'll start by randomly choosing some questions that I'm seeing, not in any particular order or subcategory. So I see people are interested in kind of understanding if they can invest in IPOs through eToro. So I don't know if you want to comment on that, and what do you guys generally do?
Sure. So we haven't enabled sort of pre-IPO or the IPO process itself on eToro, but we definitely help our customers find stocks at their first trading day. So every time there's an IPO, as it opens, we create the campaign, we create the page, we create the information about the company, but it's sort of already trading in the second market.
Excellent. I see there's now a question about the tech VCs and how it is in light of AI. It's interesting. I was just talking to my team about this this week, because there are many different AI tools that are trying to attract VC professionals in perhaps assisting with different layers of analysis, of due diligence, of creating content. I think for me personally, and this is just me speaking, because we are investing early in the life cycle of a company, sometimes I don't feel that there's necessarily sufficient data to just analyze it from a pure financial perspective. This is sometimes, I think, would be better done, again, with publicly traded companies where you have history, you have a lot of data, you have a lot of information, and then you can just, send that towards the AI. So we feel that there's a lot of work that we have to do with understanding the team, with sitting with them, analyzing, their budget, their expectations, seeing if it makes sense, and also understanding if we want to partner with them. But I think definitely there are interesting things that AI can do in terms of perhaps shaping up, like, having decided to invest, having decided, that this is the partner that I'm choosing in this journey and want to invest money, to definitely use AI tools on how to create a more cohesive document with, of course, as Yoni mentioned, perhaps a lower cost or faster time, like quicker turnarounds. So it's definitely something that we're looking at. I don't think that we'll let AI make investment decisions. At the end of the day, we have fiduciary duty. We have investors who are committing with us for many years, and we want to make sure that we're making the right decisions. And maybe we'll be kind of AI supported or backed, but that won't be the decision-making process.
I think, by the way, for public markets, it's different because you have a lot of data.
Yeah.
Right. So you can analyze. We've seen like amazing ability of AI to a company files their financials to the SEC, and we get AI to sort of script immediately both the transcript of the call as well as like analyze the entire document with all of the data of the document and say exactly what happened, and even compare it to other companies. So Microsoft will issue their financial statements within 30 seconds. I'll be able to see sort of Microsoft versus Google versus Amazon cloud growth over the past 3 years within 30 seconds. And before that, you had to like have a team of analysts. Somebody would have to open an Excel, put it, analyze it, send an email to somebody. So I think that part of public markets is definitely, I think we're going to see in public markets in eToro, AI does make eventually decisions.
I think it's not even necessarily only about decisions, but it's definitely become like the new Google. It's very fun. Like if you want to start a piece of research and analysis, you can just ask that ChatGPT something that's more kind of tailored, and you'll get exactly like a more comprehensive answer from which you can then continue to deep dive and look into new things. So I think it's very exciting and helpful. I'll just dash over a few more questions. So when do you think crypto ETF? I don't know, time horizon?
So I think a lot of people are really expecting it to happen soon. And that's one of the reasons we saw sort of Bitcoin going up is BlackRock filed for a Bitcoin ETF, Fidelity filed for BlackRock for a Bitcoin ETF. I think even Vanguard filed. And people expect that when BlackRock and Fidelity do something, they probably talked to the SEC, to the policymakers before. I think second is we've seen now, the regulatory sort of, I don't know if it's final, but sort of Binance regulatory actions. We see still the SEC with Coinbase and Kraken, but we also see the XRP sort of moving. I think generally people are starting to feel Bitcoin is being more regulated and there's more control over market manipulation and prices because of sort of how the industry is maturing. I think that was the concern of the SEC. So a lot of people are expecting it to happen over the next 3 to 6 months. But then I've seen these expectations in the past come and go. But there's definitely
Let's take a conservative approach.
But right now, there's like a lot of people are expecting it to happen the next 3 to 6 months.
Okay. So there's a question here more about the entrepreneurial journey, about maybe key lessons learned from prior to your eToro experience. But I'm just kind of bringing it a new perspective in. You've had an entrepreneurial journey within eToro that takes you, I'm sure that there are many lessons learned. So maybe let's take just a couple of key experiences or lessons learned or characteristics that you think you take with you on, or that either you learned or you developed over the years.
So I see the question also is around my first startup with cameras. I think the most important thing I learned in my first startup was the importance of unit economics. Like I remember arguing with my founders that I was 22, 23, and it was like, it doesn't work in the Excel. Like we're selling a product and we want to continue in selling these products, but actually the cost of building the product is higher than the revenues,
doesn't get lower.
I never see the unit economics eventually making sense unless we really, build a chip or develop something like just the cost of the hardware was larger than what I saw in a 2-3 year horizon of revenues. And I've learned I remember just putting the Excel and saying we're selling and we feel good because we're increasing revenues, but actually it's bad for the business, it's not good for the business. There was a very important lesson early on as an entrepreneur to understand how important it is not to convince yourself on the wrong KPIs or the wrong unit economics, because you might be scaling a business that actually just deepens your profitability. And I think that was a part of what a lot of investors saw from the transition from 2021 to 2022 is companies with bad unit economics. I think a second sort of important part where I always talk to founders, I tell them it's so important to clarify the vision, mission, values of a company and making sure that everybody understands your vision, mission, values and not only think of revenues and profitability, but sort of really understand sort of the purpose of why we're here. We want to help investors make money in the case of eToro simplified. And that's our mission. And that's what we want to do. And we want to do that through technology tools and education. And then you need to somehow connect that to all of your employees and connect that to the actual research allocation that you do, to connect that to the business. And it's always okay. Like I love the story of SpaceX. which we also invested in a bit, which was surprising because we saw the deck and the deck had no financials at $40 billion valuation, if you remember. But what was interesting there is like he said from day one of SpaceX, Elon said, I want to put people on Mars, which is like mind-blowing. But the way they make money is by selling Starlink, which is an internet connected to satellites, right? So you're like, what's the connection between those two? And that is a business model based on the same infrastructure of technology can be good if it helps you eventually get to your mission. And it's also great for the mission to be a big, hairy, audacious mission.
Let's take that. That's the tagline, like have a big, hairy, audacious mission. Excellent. Just to be mindful of time, I just want to wrap up the Q&A session. I want to highlight for those of you who are joining us perhaps for the first time that we have launched this series of webinars. We will be hosting every week, hopefully either an expert from the ecosystem or one of our CEOs, companies in the portfolio, to hear from them about how they view their own specific sector, what we can be excited about, and hopefully answer questions. Next week, we actually have a dedicated session that's going to be a closed off session for only for accredited investors. So in the event that you have yet registered with us and you are accredited and you would like to hear next week's session, I highly recommend to find the time to do that this week. I want to also take a minute to thank our soldiers and people who are taking care of us, and hopefully soon enough we'll have better days, people back home, and people feel a lot more relaxed and happy. I know as we previously mentioned, we are hard at work on that, but definitely want to say that we acknowledge that, and we're thinking about everyone throughout Israel. And I want to thank you very much for joining me.
And if the iAngels crowd want me to come back, she has my number.
They have my number. It's the thing. Yeah, we've had a great discussion. We'll also be recirculating it, and want to thank everyone who joined us today online. Have a great weekend, everyone. Thank you from the iAngels team and eToro management team.
Bye.